Good evening, guys. Speak with Iconic Trading. Hope you guys had a great day today. Um, I've been doing some more thinking about the room. Everything's progressing. I'm glad to see that we're starting to get some more interaction, some more alerts being put into the room. It's greatly appreciated. Liz, Ed, Evan, all the new guys. Evan's been around for a while, but just starting to take a more active role, getting a little more confidence, and asking questions, putting trades in the window, and giving me a chance to look at what you're trading. So this will probably be, and you have my word on this, the last webinar that I deal with candlesticks. Um, it's apparent that we need to work on the candlesticks and get them embedded into our memory, because the candlesticks make up the price action, and that's what we trade is the price action. And more importantly, on top of the candlesticks, it's where the candlesticks form that makes all the difference. Okay? So I don't have an agenda. You guys know I just kind of shoot from the hip. But I want to go over some trades, and then I want to go over some things that I noticed with some trades in the room. By all means, this constructive is meant to make you guys better and to recognize what we should be doing versus what we are doing. First, when you go to short a stock, okay, you guys need to make sure that the stock is in play, okay, and it's not just sitting in the 20-30 cent range, unless it made a move and then started to consolidate. If it made a big point move or 2-3 point move and then started to consolidate in a little range, yeah, there's going to be a second leg down, possibly a third leg down. But a lot of times you guys are playing these stocks that aren't moving, and they're not the stocks that you need to be in, okay? So the traders that have been with me for a while know what stocks to look for. Some other traders are looking for more, less spready stocks, more trending stocks, more slow moving stocks, which is great. But the bottom line is, if the stock's not in play, you will not have the follow through. That's the bottom line. So professional traders play stocks that are in play, okay? And back in the day, I used to have to look at hundreds and hundreds of charts every night. And now, we have computers that can do that for us, which is great. You need to be in the right instrument. You need to be in the right stock. If the stock's not moving, don't try to force it, okay? You don't long a stock that's way under, well, not way under VWAP. That's under VWAP, okay, or under the moving averages. Unless it puts in a higher low and the SPY is turning and you want to take a chance. Okay, I see a lot of people trying to long a stock when there hasn't been any long signals that have been issued or any long confirmations that have been presented to you in the market. So I like to have one or two confirmations. That's the moving average cross. It's got to be above VWAP most of the time. It's got to be a candle, that I know is bullish. It's got to have volume. There's so many different confirmations that I use, but I noticed that some of you guys are not, I wouldn't say throwing darts, but you need to make sure that everything that I went over starting in mid-June or July when I started the room, start at the first webinar and make sure that you have the setups down, because the setups are all that matters, okay? The trade executions and managing the trades will come, but if you don't have the right entry, you're not going to make money trading, okay? So like today, today came back, pushed a couple wrong keys, and before you know it, it was at 72.99. I thought I top ticked Cena at 72.99, and I panicked a little bit because I just got back from the gym, was having lunch, and I look up, and I see Big Red on my screen. So yeah, I did the right thing. I watched, I saw what was going on. As soon as I got a chance to get out, I got out. The mistake that I made was I should have got back in. Okay, so again, everybody, including myself, is always striving to get better. Okay, and knowing that I left 3 points on 1,500 shares is $4,500 on the table. It got me a little upset, but you know what? Tomorrow's another day. I did the right thing because I protected my capital. It was an unplanned trade. I did not mean to be in the trade. So I got out, luckily, at a little bit of a profit. But as soon as you get a chance to get out of an unplanned trade, you take it. Yeah, I could have scaled out little by little by little, but I had my trend lines drawn on Cena. It was the top of the trend line. I saw all my morning gains disappear. I just wanted to get out. So, mistakes like that happen. And it's how you bounce back and how you recover from them that is going to make or break you in this lovely business that we're in. And I say that with all sincerity because I absolutely love it, even though it's the most stressful thing sometimes, to try to squeak, points out of the market. So that being said, we're all striving to get better, okay? But we need to focus on the setups, going back to the basics. And really, every time someone views the webinar, I get notification. And when I see someone watching the webinar, as I said last webinar and the webinar before, I get psyched. I get excited because people want to actually learn. You guys know I have a small room, okay? And I'm always going to keep it small. I don't even know if I want to take that many more people on because I'm starting to be able to trade with more size now. I'm starting to be more comfortable, and I'm starting to enjoy it, And the people that I have now really want to learn how to trade. Over the summer we have people that just want to come in. Yeah, I want to learn. And when it comes down to doing the chart reviews and reading and doing all the studying and doing the channel and trend lines, they just didn't want to do it, so they left. So I'm stuck with a pretty good core of people right now that I think great, and they just want to learn. So I'm extremely happy with the group that I have right now. Hold on a second. I have to kick somebody from the room. Okay. So that being said, I'm going to start with AGN. Okay. This is a trade, I think from yesterday. As you can see here, I went long. Okay. I went long on the premise. These candles here held. These are all hammers. Okay. And they held the 9. Even though, okay, the trend is down. Okay. So get your pens and papers out because, sometimes I'm going to say you don't do this, but under certain circumstances, you do that. Okay. So the trend is down. It came up, tested VWAP, and it made a higher low, and it formed a hammer. Tested it again, reclaimed. Tested it again, hammer. These are all bullish. Okay. Hit the 9, went up, through VWAP, tested the 9, held VWAP right here. So I went long. Okay. Decent volume, and it actually was the wrong trade. Because if you look to the left, what's to the left? You got trend line resistance right there. Okay. So I covered for a little bit of a loss right there. Okay. But then what did I do? As soon as it's broke, I doubled up and I went short. Okay. So obviously the long didn't work. I got almost an elephant bar taking out these previous lows. I doubled up my position, felt comfortable, went short, looked to the left, saw the trend line support right here, and I covered. And I made double up my loss. It was a very simple trade that comes with advanced trade management, which is what we're going to focus on after these candlesticks. Because if you can't get the candlesticks down and the entries and the exits down, you cannot be doubling up your position or adding to your position at any given time. You just can't do it, because I don't want anybody in my room blowing up. Okay? Looking to the left always tells you where your support and resistance is going to be if it's not a moving average. Okay? So that's how I recouped that loss and doubled it into a nice win. It was a beautiful trade. I could have let it go back up, re-shorted it on a rejection here, and caught another 2.5, 3 points down. Done the same thing here and caught it down. Okay? These are the trades that I need to work on building and nailing every one of these. Because this is a classic stair-step pattern. Every time it hits the 20, it gets rejected. It comes back, it hits the 20, it gets rejected. We got to be nailing these, and that includes me. Okay? So even though I had a nice trade here, as soon as this trend line broke, I should have nailed this. Okay, this went from 256 down to 248. And it's a simple trend line break. That's all it is. Okay? And again, it's all of this action is under the moving averages and under VWAP. It has to take place under VWAP and under your moving averages. You have no business shorting or anticipating a short if it's above the moving averages or above VWAP, unless it's highly overextended. Okay? A lot of people in the room like catching the bounce. Personally, I say the heck with that. You know, if that works for them, great. I don't want my new traders trying to catch the bounce. Okay? That's not trading. Trading is trading the trend. When you trade the trend, you get points. Sometimes, yes, if you catch the bounce and it's a legitimate bounce, you will get points. But 9 times out of 10, you won't. Play for the heart of the move. Play the trend. Forget about the freaking bounce. I don't like hearing about the bounces. If you guys want to trade them, great. New traders that want to learn how to trade and do this for a living, don't worry about the bounces unless it's a serious reversal in the market. If you got the trend that's going 2, 3, 4, if you got a serious negative tick, you know the market's going to reverse, and you see a big elephant bar being put in the SPY, yeah, play the bounce. Otherwise, play the trend. Let the rookies worry about the bounces, or the scalpers worry about the bounces. Okay? And there's no disrespect to any guys in the room that play the bounces, because they play them well, but they are part of their trading arsenal. That's just part of what they do. Okay? It's just another segment of how they trade, is trading the bounce. That's not all they do, because they do other things well in addition to that. So if you can't get the meat of the move consistently and be profitable with the easy part of the trade, you have no business trying to catch the bounce, because that's the hard part of the trade. All right, let's start with the easy stuff. And the easy stuff is candlesticks, moving averages, VWAPs, and simple trend line breaks. That's all I want you to focus on. There was an entry made today on a stock. Someone shorted a stock. I'll just leave it at that. Someone shorted a stock, and I will reach out to this trader and talk to him about it. So I pulled it up, and I looked exactly where he shorted it. It was sitting right above VWAP, right on the 9 on the 5 minute, and he shorted it, and he ended up getting stopped out. There was that is not a short setup, and if you're new or not to the room, I know everyone in the room watched at least the majority of the webinars. You would know that that's not a forced setup. That was a trade that was forced. He was looking to jump the gun, anticipating a move, going against the trend. And that's not how we make our money. We make our money playing the higher probability setups. If anything, he should have went long off the 9. You don't short into that stuff. That's acting as support. That's like your wall. You lean against that. You don't short against that. And the same things with taking longs. You know, if you guys want to go longs, you guys got to be above the moving averages and above the VWAPs. You know, it can't be the other way around. That's what the moving averages tell you. They tell you the trend. The trend is your friend. Follow the trend. It's not hard what I do. It's really not. It's just repetition and being able to recognize candle patterns, formations, and knowing what other traders are going to do. And it's like crowd psychology. Okay, I've been doing this long enough to know and get a good feel what other traders are looking for, because I've been around the game for a while. So all I'm doing is what other traders are doing. And that's when or why when I short something or occasionally long something, I'll get points because I'm looking at what other traders are looking at. Stocks in play, buy signals, confirmation, A+ setups. Okay? That's all you need. Once you master that and know what they look like, you're going to be on your way to success. Okay? So that's the AGN trade. This was the long. It didn't work out. I covered. I doubled up. As soon as the low broke, made my money back twice. Missed this and I missed that, but that's okay. As Don said today, we're scanning around a lot, always looking for movers. You know, once we have a stock like this that we know is in play, we got to stick to it. We have to. So that's AGN. I'm not going to worry about that right now. I'm not going to worry about that. Okay, let's look at this VRX trade. This was one from that big sell-off 2 days ago. Big mistake. Again, not a mistake. Misexecution on my end. Okay. Never thought that this was going to fall this far. Okay. So you have a simple. You guys can see these trend lines. I love these trend lines. Simple trend line break with the moving average cross. Beautiful. Plus you got the 50 sitting right there. Okay. So I think this was a day I'm like, you guys, keep an eye on it. And then I went to the gym or whatever, and then the news came out and the thing just snapped. So it came down and I got short. Okay, really, I thought it was really late in the game. I thought I was chasing the sucker. I really did. So I got short here. Okay, and maybe it went 50, 80 cents against me, but I had a little bit of size, so I'm tapping out. I got stopped out. What I should have done, and I pointed this out the day that it happened, so this is for the people that weren't in the room, I should have let it go and follow my rules. Let it test the 9. It tested the 9. The 9 held. I should have doubled up my size. If I would have doubled up my position and followed my rules, it reclaimed the 9. I could have got from 159 down to 153 with huge size. I had no reason to get out right here, except my size was too big, and I couldn't take the movement of the price. So it shook me out. I should have sized down, anticipated a pop-up, got ready to add, and then let the move happen. Okay? So that was a bad execution on my part, but a learning lesson. Again, it's just size. So what am I going to do next time I trade VRX? I know that things have been trading crazy. I'm going to reduce my size so I can handle these moves. SPY, I wanted to show you with an Amazon chart. This was a day we had a little bit of a reversal in the SPY. Okay? And I wanted to show you this because we have a doji here. Okay? And then to me, this is like a gravestone, but this is a bottoming tail, followed by almost an elephant bar. So the bottom's in. Okay? This was a day I think Amazon was down like 20 points or 25 points. So the first thing I did when I saw this, I flipped over to Amazon. Okay? Because I know or I knew that there was going to be a bounce purely based on these candles. That's it. That's all I was looking at. 1, 2, 3 candles. Okay? That's all I was looking at. So go over to Amazon. Look what happened to Amazon. Thing tanked all day long. Right about the same time, SPY starts to turn, I went long Amazon. I think I grabbed about 3 points, 4 points out of this. No, about 3 points. Just purely knowing what to do. If A happens, I'm doing B. Okay, the SPY's down big, Amazon's down 20. The SPY reverses, it picks up some speed. Guess what's going to follow? The stock that's down the most that follows the SPY, which is Amazon. So you always got to be thinking ahead. Stock's down 20. SPY's picking up. Going, 2, 3 points. Amazon, just buy a couple hundred shares. I mean, they just go hand in hand. So that was a perfect example of knowing what to go to when the SPY turned, because it was down so much. The stocks that are down so much and the stocks that are up so much on any given day are going to be the first ones to reverse when the market reverses. Okay, that's why I went to Amazon this day. And I very rarely will play Amazon unless it's on a market reversal. There's a SPY again. VRX. This is from a while ago, I think. Again, well, no, maybe this is the same day. This was the same day. And now I know exactly why I wanted to show you this. Simple trend line break. Faded down. Okay, which I usually don't play these. I usually play them off of VWAP on the second leg down. So you could, if you don't like playing these initial fades, which I usually don't because I get burnt, I'll wait till it retraces up to around VWAP. And then I know that I'll get some kind of resistance around VWAP. Like on that Cena today when I faded that first move. I had the 180 was on the weekly, the 200. So I knew I had support there. It went like 80 cents against me, but I knew it was going to come back because I had support there. So I will play these secondary legs down. I try to stay away from the first legs down. So here will be a nice short. Okay, again, look to the left. That's where the previous resistance was. Stop would have been VWAP. Could have rode it back down. But more importantly, what happened here? Classic double bottom. Okay, so now we're back in the fall market. These are working again. As soon as this came down to test the 160 level, you guys should have went long. And I know some of you did, but you need to anticipate, okay, double bottom, 160. It held the first time. Let's see if it holds again. 8-point move off the double bottom. 8 points. And even if you didn't get here, this candle is so damn bullish, you could have got long at 165 on the close of this candle and got 3.5 points out of it. That's why you need to know your candlesticks. And like I said, I think there's like 6 or 9 of them. I mean, it's not hard. You just got to recognize them. And more importantly, you need to know where they land on the chart. That's the second part of knowing your candlesticks. Because if I get a hammer here, it's not going to matter. Okay? It has to be in the proper position to make a move. So let me make sure I cover the charts that I wanted to do, and then we're going to cover a couple of these candlesticks. VRX already did. Support and resistance. SPY we did. VRX I did. Just bear with me, guys. Neutral, bottom. Okay. So, a lot of this information is not mine. I did get it from another educational site, but it is very germane to what I am trying to teach you. Okay? So like I said, with these candlesticks that I'm going to show you, where these occur within a trend makes all the difference. Okay? And that's what you need to start recognizing, where the candles are occurring. Okay? It's just as important as a candle itself. You need to know where they're showing up on a chart or in the trend. Okay? Because they will not mean anything if they're not in the right place. So, you guys know what these are by now. Okay? I'm not even going to explain it. You guys know what these are. And if you don't, you need to be doing your homework. Simple. Classic elephant bars. Okay? We know what these mean. Okay? Hopefully everybody knows what elephant bars are, because we talk about them every day. These. Okay? I consider these all dojis. Call them haramis, whatever. I call them all dojis. That's what they are to me. Okay? Because there's really not much that separates this one from this one. These all tell me exactly what this says. Momentum is slowing. Even though they're neutral, they tell me it's a change of direction. Okay? In my experience, momentum is slowing, change of direction is coming. That's what these tell me. Okay? So again, they're not hard to recognize, especially if they're at the top of a parabolic or if they're at the bottom of a falling knife. You need to recognize the move is slowing down and the trend is probably going to reverse. Okay? These are all neutral, momentum slowing bars. Reversal of trend is probably going to happen. Topping tails. Okay? Topping tails, tell you, sellers have taken control. Okay? Great question. What did this look like before it became a topping tail? Well, obviously this one was all green, right? And it got sold all the way into. And if we had more time, it would have ended up red. Okay? These happen at the top. This is a topping tail. If you had more time, it would have been a red bar. It would have looked just like this. You just ran out of time for that candle. Okay? Topping tails, you need to recognize. Okay? Again, topping tails followed or preceded by the dojis or the neutral bars, the momentum slowers. That you put those two together, you know you got to change of direction. Okay? It's putting the pieces of the puzzle together. Bottoming tails. These I love. All right? I call these hammers, bottoming tails, whatever you want to call them. Know what they look like and know what they mean. Okay? These usually occur at the bottom of a big move. Okay? And again, what did this look like before it became a bottoming tail? This whole thing was green. It got bought back up. This whole thing was red. It got bought back up. These occur at the bottom of a big move. I'd love to see a doji preceding these as well, because then I know change of direction. And when these happen on a moving average or on VWAP, you're all in with your size, going long or going long. Topping tails, you do the inverse, you go all short on the topping tails. If these happen on a moving average. If this breaches the moving average, it comes back and reclaims and closes above the moving average on good volume, it's going to be bullish. You're going long. Okay? If these happen and you're really not near moving average, they are important, but they don't have as strong as a market moving indicator as if they closed on a moving average. Okay? So doji, bottoming tail, long. Doji, topping tail, short. Okay? Just two candlesticks put together. And I think like on my third webinar back, I gave you a list of 6 candlesticks in 2 candle patterns. that I want you to know. I mean, if you want to be a professional trader, you need to know your candlesticks. And looking at some of the trades, we still don't know our candlesticks. So that tells me that we're not really studying our candlesticks. Because if you can't memorize 12 candlesticks, and basically it's 6 two-candle patterns, and in all reality, you shouldn't be trading because you don't want it bad enough. Okay? And when you want something bad enough, you're going to do everything you can to make it happen. So if you're not doing everything you can to make this happen, then you don't want it bad enough. You know, harsh reality, but you guys know I tell it the way it is. You have to want it that bad. Okay? If I know a lot of you guys have, full-time jobs. Okay, you get home, you get the family, some of you guys get dinner, but you know what? At the end of the day, you still got to take your hour or two and do your chart reviews. You got to see what you did right and see what you did wrong. You got to be doing your journal on what you did right, what you did wrong. Make sure that you don't do it again. A mistake only happens once. If it happens more than once, it's not a mistake. Okay, it's intentional. It's a mental error. Okay? Remember that. If you constantly are making the same mistake, you have to address the mistake you're making. Okay? You have to. You can't force trades. You got to wait for your setups. And you cannot make the same mistake more than once. And if you do, you have to figure out why you're doing that. And again, that will go into the trading psychology, which I really would like to be there by now, but we have to get these candlesticks down. And when I see you guys posting trades or posting, entries in chat, and I pull them up, I'm like, man, that's a kick-ass entry, man. Beautiful. Beautiful. Then I'll know that, there's progress being made. I did a chart review with somebody, for a couple hours last week, and a lot of his entries were spot on. Were beautiful. Entries I would have taken. And then some of them were just forced because lunchtime lull, not a lot going on, kind of bored. Let's see what happens. We're not just going to throw shit against the wall, see if it sticks, guys. We have to take setups only. Because the easiest money out there to be made is when there is nothing happening and traders just make trades to see what happens. And the market will just take your money and say, thank you very much. Have a nice day. So, here is the big study for today. Big 4 sections, guys. Not hard, right? Not hard at all. You have your elephant bars. Open and close green, open and close red. You got your dojis, your neutrals. You got your bottoming tails. And you have your topping tails. And probably 80%, 70% of the traders in this room know these candles, but don't know how to interpret them or don't know how to play them. Okay? And that's why it's said where these occur in the chart makes all the difference. Okay? If we're not in an uptrend, okay, and then you got a doji, and then you got following by a topping tail, if there's no uptrend, these candles mean nothing. Absolutely nothing. Same thing in a downtrend. If you're not in a downtrend, what the hell the bottoming tail is going to mean to you? Nothing. So look for these candles to be forming on the charts around your moving averages and around VWAP. Okay? Print this stuff out. They're not hard. These will tell you what's going to happen in the next short term, next couple candles. And then you take the next couple candles and worry about the next couple candles. You know, you just take it one candle at a time, one trade at a time. That's all we got to do. It's not hard. It's just putting all the pieces together. Okay? All of you should know this. I mean, this is basic. But if you don't, now's your opportunity to learn. Okay? I'm always drawing lines for you guys. Always trend lines. I'm a big trend line guy. I can see, and most of you now probably can see the trend lines before I even draw them. But I draw them because they're so important in my trading. I want them to be embedded in your trading. I want you to see them before I draw them. Okay, uptrend. You got your trend line drawn. Okay, so right here it's acting as trend line resistance. Comes down, makes a higher low. It breaks the trend line. So what's going to happen next? It's going to come down and test it. And that's what you want. And you want this to hold. Because now this trend line resistance becomes your trend line support. And as soon as it holds, that's your buy. Right there. Okay? So trend line resistance, higher low, breaks the uptrend, trend line support, stock's off to the races. Okay? Sideways trend, just trading in the channel. I point this out to you as many times as I can during the day. When I see stocks trading between, the previous close and VWAP or previous close and 200, just short, up and down, up and down, up and down. Just short and long. Just scalp it. Sooner or later it'll break, so make sure you're ready for that. But you'll at least get a good 3 or 4 scalps out of a channel trend. And this is a channel trade to me. Okay, they call it sideways trend. This is a channel trade. Okay, downtrend, same thing. Stock's coming down. It hits trend line support, makes it lower or high, breaks support. Support becomes resistance. It holds. You short. Boom. Okay, that's what you do in a downtrend. And this is simple. Resistance, once broken, becomes support. Again, daily, guys. I say that daily. It's so basic, but so simple. Supply becomes demand. That's what Eric C is always talking about. The levels where there's the market makers are adding liquidity or taking liquidity. Support, once broken, becomes resistance. Demand becomes supply. Okay? So it's like everything changes. Like this was resistance. Now it's support. This was support. Now it's resistance. It's the same line. The only thing that changed was the stock. The stock broke through it. That's the only thing that changed. And if this happens with volume, then you know it's a real move. If these breakouts happen without volume, it's probably going to be a fake, and it'll come right back down. So again, volume is extremely, extremely important. Extremely important. This is just another example for the newer traders. This is Walgreens. Always say look to the left. Always say look to the left. And I'm always doing that. And probably every webinar, I'm telling you, look to the left. And I am telling you, this is the last webinar with candlesticks and looking to the left. Because if you guys hopefully will do the time and put the time in and get this and understand it, so we can move on to bigger and better and more technical aspects of trading. Okay? But we have to get the foundation built. And there's some of you that still need the foundation built. There's some of you that are still forcing trades. Again, taking trades that aren't in play and forcing them. Okay? And you can't do that. You have to let the stocks come to you. And when they come to you, you got to take them. So this made a nice move up, came all the way down. Look where it based. You think it just based there out of coincidence? Look to the left. That's where the previous trend line resistance was. And now it becomes support. This actually works, guys. This happens every day. It's little indicators that tell you when to get in and when to get out of a stock. Okay? It's very important. These little tidbits I give you guys are so important. Just like the multiple time frames. You know, it'll take me 30 seconds to scan weekly through the 1 minute. But I can't tell you how many times, A, I found great setups for the next day or two, or B, it saved me from taking a trade, or saved me from being stopped out. Because there was support and resistance that I didn't see on the 1, the 5, or the 15. I can guarantee you there aren't a lot of traders that go out to the 30 and go out to the 60 and go out to the daily and the weekly. Well, maybe the daily and the weekly. But I check them all. Because when I go in, I want more than just a point. Okay? A lot of traders don't do that. A lot of traders will be happy with the 30, 40, 50 cents 10 times a day. I don't like that. I want my, 3 to 5 trades a day, get my couple points a trade if I'm lucky, and I'm happy. I think that's going to be it on the candles. Everybody did the topping tails. I already did the Amazon. So that's pretty much it on the candlesticks, on the charts, on the formations. My best advice to any trader is treat every day like a new day. Okay? Come in, you be positive. You know me, I'm big on my motivational videos. I watch them every morning. I suggest you do the same, because this business takes its toll on you, especially if you're not green every day. And I know a lot of you have, damage from other rooms. So the more positivity you have in your life, the better you're going to be, and the better you're going to be able to read the markets, and the better you're going to be able to react to taking a small loss. Okay? So go to YouTube. Les Brown is awesome. Just search motivational videos. They're like 5 minutes. It'll get you mentally prepared to what you got to do during the day. Okay? And I've said this before, I'll say it again. Every day we are up against the best of the best. If it's a computer or if it's traders, market makers, let's not make our job any harder than it already is by being in the wrong stocks, forcing trades, just wandering off. I mean, every day I put a game plan up there with the stocks that you guys should be playing, and I know at least 1 or 2 traders, took some trades today with me that worked out very well. But there really isn't any reason why, unless it's a cash issue as far as having the funds available, that you guys aren't following my trades. You guys should be taking my trades, because that's the way you're going to learn. And at the end of the day, when you're doing your trade reviews, it's just going to hit you, okay, well, this is why Peter took the trade here. And if it doesn't, just email me or call me and I'll explain it to you exactly why I took the trade there. But the stocks I put up there are the stocks you should be playing. Okay? I don't like the new traders wandering off and playing their own stocks because you haven't mastered the basics yet. You haven't gotten the foundations down yet. So the stocks that I give you are the stocks that will trend, should stay in trend, and aren't going to wipe you out. Okay? So yeah, sometimes I'll play the $200-$300 stocks. So we'll get 10 shares. Okay? We're not here to make you, a millionaire overnight. We're here to get you green consistently. And then once you're green consistently, then you're going to make the money. Okay? That I will promise you. But you got to lay the foundation. And you got to learn. So, like, even my moderators, we all have different trading styles. Okay? Even though we all kind of came together a while back with Google Chat. And, that's where the whole moving average VWAP. That's where, I didn't introduce that to them, but that's where we all worked on it. It was on Google Chat before the room developed. But even Don, AP, Chicago Lou, I mean, everybody should be taking my trades. If they're not for you, they're not for you. But at least follow them. Because the trades that I take, especially now that summer's over, have been doing phenomenally well. And, if you're a moderator or not a moderator, a trade is a trade. Like Don calls out a trade, I'll pull it up. If it's for me, I'll take it. Take advantage of my experience. And when I take a trade, there's no reason why you shouldn't just be taking along with me. None. Because if it's good enough for me, believe me, it's good enough for you guys. Because I have the same objective as you, and that's to provide an income for my family, to have a nice living, and to make money. So if I'm taking a trade, try to follow me and take the trade with me. I'm still working on putting my entries into chat. I say it every week, but I am getting better at it, and I have been calling them out 2 or 3 times. So hopefully you guys will trust when you see my trades actually get executed, like the Shire today. That was live screen share. That was well over a point. I had the Cena short today, live executed. That was almost 2 points. So there's really no reason why you guys should be going off on your own at this point, especially the newer traders, and trying to force stuff. I know Netflix is a fun stock to trade, but you're up against the best of the best of the best, and Netflix and Apple really haven't been in play recently. Now they're starting to come back into play, but I won't play them unless they're actually momentum driven on that day. There's no reason not to. I can look at a stock and I'll tell you if it's in play or not. If it's not in play, there's no sense even looking at it, even staring at it. Like Baidu, I used to trade Baidu every single day. I used to know every single pivot point, every single fib level. I used to know that stock in and out. Half the summer, it wasn't even in play, took it off radar. Okay? So the stocks that I put up, I know pretty well. So trust in me. Take the trades, follow my stops, and let's get to the next level. Let's get over this building the foundation, and let's get more into trading. Okay? So hopefully we'll all know our candlesticks. Hopefully we'll know where they need to be on the chart in order to initiate a trade, either long or short. And hopefully everything's going to start to come together for you. So I sincerely want this to be the last webinar on the basic foundations. So I want to get into, again, psychology. I want to bring in more technical analysis that I don't use, but I used to. But it will help the new traders. But there are a lot of things that I see on the chart that I just know are there because of the intuition, just because of the screen time that I have invested in this business. But there are a lot of tools out there that will help the new trader. But we have to start with this. So study it, know it inside and out. The last 2 weeks have been phenomenal for me. Hopefully you guys are making progress. You know how to reach out to me. Call me, email me. It may take me a day or two to get back to you, but I will get back to you. You guys know that. And I want to see you succeed. But you have to do the work. Trade review for your chart reviews. Okay, if someone calls me, and this would be my last sentence, or my last whatever. Someone calls me and asks me a question about a stock about why I did something or about why they did something on this stock, I'm going to say, you know what, email me the chart review. I hope you have the chart review. Because if you don't have the chart review, you're calling me. I have no problem taking my family time to help you. None whatsoever. I think I'm the only room that every one of my traders have my cell number. Okay, you can call me at any time. I will call you back. I will go over my trades. I will go over your trades. I just expect you to do your end of the deal. That's all. And chart reviews are your end of the deal. That's all. The rest is up to me. I'm trying to lead you. I'm trying to teach you the right things to do. I'm trying to break you from the bad habits from the bullshit rooms out there. So please do your part of the deal. And you got my word, I'll do my part of the deal. On that note, have a great night, and I will see you in the pre-market. Thank you.